Hi, everyone, and welcome to the Qredible broadcast. Today, we are here with Tom Lineen, President at Westtown Payments, and of course, Brian Fitzpatrick, CEO of Qredible.
Great to be here. And we're going to be talking about some important things today. So, one of those questions I don't think most people really even think about is who decides whether your business gets to accept payments, right? Because if you're in a complex industry, whether that's CBD, hemp, firearms, nutraceuticals, the emerging peptides world, the answer is not always obvious, right? So getting it wrong can also get you shut down overnight. So today's guest, Tom Lineen, who I have a tremendous amount of respect for, who's one of the great leaders in this space, has more than 20 years really solving exactly this problem. He's built a payments company around what I would call sort of a radical idea that compliance and integrity are not obstacles to growth. They're the engine of it. So as working in this space very closely with Tom and many others, we're going to talk about those important things. So welcome, Tom. Great having you.
Brian. Appreciate you having me.
So let's sort of start with the reality on the ground. Payments seem simple from the outside. You swipe card, money moves. But for a lot of businesses, especially in regulated or the complex industries that we hover around, it's anything but simple. So paint us a picture of exactly what's happening out there in that space and sort of your vision and mission with Westtown Payments for that.
Sure. Thank you. Yeah, payments is a lot like a duck, right? Calm on top, swimming like hell on the bottom. And a lot of what we look at Westtown Payments, and our thesis was when we started the business back in 2020, was we can and we needed to get to the highest level in the industry, and that is to align ourselves with the bank. And of course, Visa, MasterCard, Amex, and Discover are kind of above them as the card brands, but the banks are the, in this case, at least merchant services are the highest in the ecosystem. And so we aligned with, at the time, Westtown Bank and Trust out of the Chicago area, and hence the name Westtown Payments. And we were truly a joint venture with them. And so they were in the room for all the decisions around our underwriting guidelines, our compliance outline, the markets that we were going to serve and how, and what was in scope and what was out of scope. And so by doing that, one, we had a plan, and if we stuck with that plan, if we stayed between the guardrails, then we were good to go. And anytime something came up that was maybe a little bit unique or a new market came in, we had the opportunity to go right to the COO, CEO, chief compliance officer, and run that idea up the flagpole. It wasn't through multiple channels like the current ISO environment is today, where you get someone who says yes, and then all of a sudden there's somebody you've never heard of who squashes the whole thing, and you spent a very long time building your plan. Or on the flip side, you think of like the aggregators out there, the payment aggregators who end up in markets by accident, truly, because someone comes to their application, they apply, they get approved, they start processing, and all of a sudden, those folks are holding a bunch of your money. They call you up and say, "What do you do?" It's a very uncomfortable situation, but that's how they end up in certain markets. They're like, "Oh, this is lucrative. Let's go," until frankly, something happens, as I think what has happened beginning of this year, to where they start exiting, but not in a orchestrated way. They just shut folks down, hold their money, create havoc. And so we went at it in a much more orchestrated manner, where we partnered with the bank. We brought in third parties like Qredible, who understand and are experts in that certain vertical, in that space as far as compliance goes, what needs to happen, and allows us to operate at scale with a relatively small team compared to what it would have taken 5-10 years ago with a manual process. We'd have exponentially more personnel on the team just to manage, and frankly, then it becomes a whole lot less profitable. and viable as a business model.
Well, you're tremendously committed to automation, which certainly helps in speeding up processes. And I know how committed you are to that vision. And you've probably seen a lot in 20 years, because 20 years in this industry is sort of like somewhat like dog years. But and payments has been particularly turbulent during that time. So take us through sort of the arc. How did you get here? What has changed most fundamentally about the industry in that time frame? Have you seen it evolve, and where do you see it going?
Sure, absolutely. So, it's interesting. So I started off my career in the payment industry as almost a afterthought. I ended up being in the right place at the right time. The best part about payments, and I'm sure everyone who's listening to this knows that their journey to this industry was different, and it was unique, and it was almost like you stumble upon and go, wait, this is amazing. And so in my case, I started off, and I won't bore you with the whole details, but I spent a little time at First Data, like so many people in this industry. So I got my card there. And then I ended up joining a company in Utah called AuthorizeNet back in 2000. And AuthorizeNet was really one of the first, I would call it, SaaS companies. And they were, empowering commerce. And they're still here today, right? They're owned by Visa now, so they have a much bigger role in the industry. But I was like the 29th employee. And I really believed it. I saw it. I saw what the internet could be, but it was only going to be that if you could transact. You can look at something online, say, yeah, I want that, put it in your shop cart, buy it, and you receive it. Like, great, all from your couch. And back then, that was just such a foreign idea. But we jumped on early. I was an early adopter with them. We had an amazing run. And then I got on the other side of the industry, the ISO side, also a great company. It's called Synergy Data, which is now part of Priority. Grew that hyper growth for a couple of years. And then, I got on my own side, started my own ISOs, and now I'm on the bank side. And so I've seen all sides of this industry, and it's an amazing industry. But I also say this too, for the first, let's call it 10 years, maybe 12, there wasn't much innovation, frankly, until Stripe and Square came into the market. And so Square went after the card present business, and Stripe went after the integrated, API developer business. And I remember specifically being at a conference in Chicago, and one of the gentlemen from Square spoke at the conference, and it was like maybe 2012, and everyone's like, "Wow, why is that guy here? Like, that's not valuable." And I sat there and thought to myself, I was like, "Hang on, this guy has figured out how to underwrite accounts and board them quickly. Took away that pain. He actually also eliminated pricing arbitrage, because it was all the same pricing, and eliminated the salesperson, which I don't advocate for, but it worked for their model because it made it easy for folks. It wasn't, they didn't feel like they're being sold. They wanted it. They signed up. They got their dongle. They're off and running. And it was, truly though, at the lower end of the market. But that's when the innovation happened. And then it just kept going and going and going. And interestingly enough, back when Square was going, I got to talk to one of their risk people. And this is several years in. This might have been like 15, 16. And mind you, this is secondhand information, but basically told me they were making about 65 basis points and they were losing 75 basis points in risk. So they were losing money on every merchant, and they weren't making enough in volume, but they had a plan, and their plan was scale. They wanted to own, as much market as they could. And then they figured out how to make money. And that was through a couple of their products. But either way, that was innovation. And a lot of people still look at it, from the ISO side, and they're like, oh, they don't compete with me. I'm like, no, you don't understand. You don't compete with them because you're not doing anything innovative. They're doing the innovative. You're losing accounts and you think they're going out of business, but they're just going away from you. And they show up over there. They show up at Stripe. But I'll also say this, and this is where I think the ISO space should get not necessarily comfortable or happy, but there is still a need for the salesperson, for the contact, for the communication, the community aspect of it, to understand what these folks do, and to also be that person who, when there's an issue, they can pick up the phone and talk to a human being. So they haven't solved that. They can't solve that necessarily because their model's not built for it, but they certainly have solved, ease of boarding. They definitely, and I've seen this, let their customers scale to a certain level. But there's also that part of it. Okay, now I run a small business that's succeeding and scaling. Now I actually need to know where my money is. I need to know when I'm going to get paid. I need to know, where I can go from here versus, unfortunately, as you've seen, Brian, and I've seen, especially in like, let's call it the peptide space or even the hemp space, folks start scaling. They think everything's great. All of a sudden they don't see a deposit. They start reaching out. They can't reach anyone at any of these companies. And finally, weeks later, somebody sends them an email and effectively says, what do you do? Because we have all your money and we're not even sure. That's an awful email to get. And you realize at this point, you're like, okay, everything I say from this point forward matters for me getting my money and continuing to have a merchant account, or at least a processing account. And I think that's where like innovation has now splintered again. And now it's about, okay, that's great, but talk to me about your support, your processes, how you look at risk management and also risk increases, and just how you handle situations where maybe there's a little bit of lack of clarity, and your processor needs to get that clarity to continue the relationship. And that I think is now growing to be much more important, especially in these high compliance industries, which have tremendous growth, but also have risk. And so these folks have to know who they're doing business with and how they are going to react. Because again, amazing technology. I certainly think several of those folks have some incredible products, user interfaces. They make it very easy to do business, but that is also part of the, I guess, I don't want to use the word trap, in that you think, okay, everything's all good until it's not, and then what?
Well, that's
not a regulated bank. So,
but that's sort of the problem. I mean,
it's a problem.
I mean, that's the challenge, because we see a lot of people getting turned off. Literally, like the processing gets shut off because they're trudging into areas they're not necessarily always equipped to do with speed, right? So where I know you've been investing is speed on the compliance side. So we have to check these boxes because we're going to partner with you in some of these areas. So I want to dig into that a little bit because it's something you're very deliberate about. The idea that compliance isn't a burden, it's actually an asset, for us to be able to better serve our customers. And a lot of folks in FinTech have treated regulation as a wall to get around or something to avoid. And you've taken the opposite approach, so let's talk about that, because I think that enables you to be that longer term partner. So I want to dig into that a little bit.
No, absolutely. And I think that also goes for, some of the customers, merchants we interact with. Unfortunately, some of them are like, well, I don't want to do that. I want the easy button. I want the easy path. And you're like, great, that doesn't exist anymore. And let's, like, again, I'll use that hemp on one side, and probably hemp is a great example. So the hemp world at one point was, like they didn't know what they were even underwriting for, frankly, back in like 16, 17, 18. And so then the Farm Act came out and it became a little bit more clear. Okay, here are the guidelines, which is super helpful, right? We're all just looking for the rules of the game. And that's when I saw that and I said, okay, you know what? We can build a program around these rules. The 2014 Farm Act and even the Omnibus Act that followed, they did certain things, but they really didn't clarify. They didn't drop the four things. They didn't, approve interstate commerce. They didn't truly define hemp versus marijuana, which is still one of those great conversations in the industry. But what we did do is they gave us enough guidelines that we could build a program around. The bank could get comfortable with it. We could take their deposits, we could lend to them, and we could process payments. And so we started down that path. But our idea was that too, Ryan, is like, okay, we can't do this manually. We need a technology partner. And I've always leveraged technology. Technology is super important to me. It creates that 10x efficiency gain, effectiveness gain. Now with AI, there's even, much more to be gained, but we don't, that's a different podcast. But in this moment, that's super important to us. There's also standardization. We can actually put things in and say, hey, these are the things we have to look for, because there are no-nos. These are the things that are maybes, and these are the things that are always. And so we can do that, and we can really cut down on a lot of the work that has, unfortunately had to be done manually. And so that's been a huge benefit for us. But also too, it's a process, it's a path. And so, when someone says, hey, I need to be up by, today's Friday, Monday, I'm like, not if you're in the hemp space, and not if you have 150 products, that all have COAs, and we got to, there's work that has to get done to make sure that they're not doing something that's going to harm them, right? So we want to help them out, but we also want to make sure they don't harm us, they don't harm the bank. And because that, brings the card brands down, that brings the 3-letter agencies down. I was thinking about this on the ride here. It's like, 4 questions you ask. It's like, who are you? Where are you? What are you doing? And what are you saying? So what are you selling and what are you saying? So if you can answer those questions, you get a real good picture of what that business is. And then you have the work that your team does, validating COAs, making sure they're not forgeries, validating, their social media, other things. They're telling us certain things. Great. We'll trust you, but we got to verify. And so we do that. We get comfortable, and we say, okay, now once we get on the other side of it, it's a green field, because we're a bank. Like, what financial services are you looking for? Merchant services, great. Do you want a banking partner? Oh, you have an account with one of the large 5 banks in the US. There's a really good chance they don't support hemp. You don't know that. They won't tell you. The business banker will open the account. But let me tell you, there's somebody in that compliance department, when you send that first ACH or wire to that manufacturer that has hemp in their name, or CBD, there's a good chance your account's going to get closed down. And so we support those activities. And then again, lending, certain things, other products and services, but they're really, they have a real banking relationship at that point. And that's important, because that's stability. And with stability comes your ability to grow and scale, because your foundation's solid. If you don't have that, you really can't put real money into your business, because you don't know how it's going to react. Is it going to be held? Are you going to be kicked out of some processor? Is Shopify Payments going to shut down your account because you're selling what you said you're selling? These are things that we can address and we can support. We just have to know what you're doing. And so through there are different questions, leveraging, again, Qredible and other services, we get a really good view of the business, and we can get really comfortable with it, and then we can scale with that business. And so we've helped a lot of companies get to the sales numbers, or revenue numbers, I don't think they even anticipated 6, 7, 8, 10 years ago when they started. But they're significant now, because they have a solid partner who's
and I think that's
helping them.
And that's the part where I say you're leaning into it. It's because I read a lot of your LinkedIn posts, and you had indicated on LinkedIn that your quote was, "We focus on how businesses actually operate, not on how they look on paper." That means leaning into the complexity and not avoiding it, and building solutions that are steady, compliant, and built to last. Because ultimately, if you're not doing the right stuff and you're doing the wrong things, you cannot have an enduring payment relationship with the merchant. So you're actually not serving your customer by cutting corners and making things go faster by avoiding things. Instead, you're building speed into the process while being able to check those boxes faster, so that you can do all the necessary work and keep that enduring relationship. So having said that, what do you think the biggest mistakes that you see merchants making or businesses making when they're sort of selecting a payment provider, especially in the complexity of these highly regulated industries?
Absolutely. I think that, if you're a weekend hobbyist, right, you sell belts that you made at the, at a series of, fairs and festivals. Great. Go get a quick account with Square or Stripe or whoever. That'll serve you. You'll be fine. And in some cases, I guess if you need to, use them as well to get your business started off the ground. However, if you don't ever have an interaction with them, and you're in we'll call it regulated industry, right? So that could be hemp, that could be no, you're not selling peptides at a fair, I don't think, but okay. But if you're in any of these, industries where you read and you see and you're like, okay, I know I have to do certain things. There's a really good reason to interact with a company that, one, maybe markets themselves like we do out there, letting people know the verticals that we support, and then talking to someone and saying, here's what I'm doing, here's what I'm selling, here's my website, whatever. And we do this now, we do pre-vets. So we don't even have to take a full application. They can just send us their website and we'll look at it. And we won't say, oh my God, this is awful. Please lose my number. We'll say, okay, this is great, you're doing well. However, you can't say this, you can't sell that, you can't do this. And once you adjust those and remove them, come back to us, and then we can move forward. And that is important, because that's actually where we are today. And frankly, as we were saying before this, the market, the landscape is changing so quickly that what was okay last week may not be okay this week, and vice versa. What was a no-no may now be something that they're pushing through the FDA to get endorsed. And all of a sudden now you go, oh, okay, that's a market that wasn't available to me. So we're there, again, with the help of you guys. We really keep our finger on the pulse of what's going on, not only in Capitol Hill, but at the three-letter agencies, to say, where's the market moving? And it doesn't move usually it doesn't move seismically, but it'll move 1 or 2 degrees. And so that now may open up certain products or certain business models, or that may preclude you from going there now because something has changed. And I'll use the research-only peptides, where, I would say even at the end of last year, beginning of this year, there was a litany of research-only peptide accounts, and they were doing quite well. And then the card brands came in and said, hang on a second, this has gotten out of hand. And so they went in, and basically said, hey, show us your, show us that this is approved by the FDA. Show us your certification that you've had your, website reviewed and it's certified. And they couldn't, because these products aren't able to achieve either of those standards. And so those started going away. But we looked at those folks and said, hang on, do you want to run a business that is acceptable to the FDA, to your state you operate in, and whatever else? And if they said yes, they said, great, let us help you change your model, change the products, and even to the point where we were introducing doctor networks and pharmacies that will support their business. So they're now able to go from a gray area to a clear path to scale a business. And so that's part of it, Brian. You got to lean in. And to your point, like a lot of companies will not do that. They're about speed. They're about numbers. I need 60,000 new signups a month, or whatever the number is. That's not really our deal. We're owned by a community bank. We have a kind of community bank ethos where we want to know who our customers are. We want to help them out. We want to share our many years of experience. Not only myself, my team, we're all very, very experienced. And so we're doing this. And there's some folks who are reluctant. They're like, no, I want to keep doing this. We're like, okay, good luck. You're not going to be a good fit for us, but doesn't mean you're a bad person. It just doesn't, your business model doesn't align with ours.
Right.
But when they do, or they're already there and they're saying, okay, now I really want to go, but I'm working with, one of the companies I mentioned before. And I'm like, okay, you can't do 20 million a month in credit card processing on that platform and expect that you're just going to be able to grow it to 25 or 30. They don't know who you are. And at some point you are going to hit their radar in a bad way. And so that's why we're there. And then I'll add one more thing, and then I'll stop at the, Visa specifically, and I think MasterCard has followed suit, though not as publicly. Visa came out with their VERP protocol. And they've always had their high-risk program, registered high risk, but this one is very defined, and telemedicine is out of there. It's actually at the highest level. It's a tier 1. And so a bank has to go there. The bank has to pay $100,000 a year for this certification and go through a rigorous review. And then once they pass that review, they have the ability to board these accounts, register them, and then Visa works hand in hand with the bank. If there's a bank out there boarding these accounts that didn't do this, then they're literally in violation of Visa rules, which you never want to be on the wrong side of the card brands. And especially if they're a sponsor of one of these aggregators, who maybe they have 5, 6, 7 sponsors. So they, kind of thought, okay, no big deal. Well, now they're boarding those accounts on banks that aren't registered with Visa, and eventually Visa and MasterCard, they figure it out. They may not figure it out in the moment, but they always figure it out, and they come knocking on those doors. And so these folks have no choice but to shut these accounts down, regardless of how well they're performing. And so we went the other way. We spent the money, we spent the time, took forever, because we're a bank and banks don't move super fast. But we got there. We got our licenses for all 3 tiers, and so went into market. And ironically, happened to hit it at the same time as these aggregators were having to push these merchants off their platform. Either their products were research only, or because the bank wasn't able to support them. And so we really got lucky in that timing, but we also saw the market, and we invested a lot of money in both resources and licenses to be in that position. So to your point, like we spent way ahead. If you build it, they will come. Well, that's what we did, and that's not usually the best business model, but in this, we saw it. We saw where it's going. We know we're going to be here for a long time. I mean, we're part of a 100-year-old bank. There's a really good chance this bank will be around much after I'm gone from this earth, not just from the bank. And so, the way we look at it is everything's a long-term decision. And so, but it takes some, forethought and planning, and just take a deep breath and take that first step.
I love that approach, because you're building something not only scalable, but you've been investing in the sustainability of this model and this company. So, and that sort of begs the question: is looking out 3 to 5 years, where do payments go? What does the landscape look like? Who are the winners and losers?
I'll tell you. And there's another program that just came out this year, end of last year, called VAMP, and that's a Visa program as well. And that's their attempt to identify and curb fraudulent merchants, or merchants that have excessive chargebacks, fraud, all the things that affect their brand, and the brand is the most important thing for all 4 of the major card brands in the U.S. So when that came out, and by the way, the most important thing about that is that's not a merchant specific program. That goes after the acquirer or the bank. So the sponsor, and it says, hey, sponsor, your portfolio is over this threshold, and here are all the merchants that have these VAMP violations. And so what that does is it puts a very bright light on every bank in the acquiring space. And really, it affects the community banks much more. The large banks they have such a portfolio that these ratios are infinitesimally small, because they just have a massive portfolio. But for the community bank, it affects us all. And so that's important, because the community banks are the one out there innovating. And so if the community banks are now under this microscope, and there are merchants that you probably very much needed to be identified, maybe even acquirers who need to be pointed out, like, hey, as a bank, you have a very high ratio of disputes. You should get that in check. And so, okay, I'll give that. I think the program does that. I don't want to go down the road of if is it a good or a bad program, because that'll take us way off. But I do want to say that that's there. And it is putting a lot of pressure on the acquirers, and it is actually making acquirers maybe rethink certain business models. Now, you'd say to me, well, Tom, you're in some high risk business models. What do you think? And I'm like, well, actually, I think they're high compliance business models. But performance wise, I think these are very sophisticated operators. They leverage tremendous array of technology to help identify customers who maybe have bad intentions, or who operate at a high level of friendly fraud, which is another one of my favorite terms. So they've done a good job of rooting these folks out and scaling their business at the same time. I love those businesses. I want to support them. And I do believe that, yeah, you have to take some risk, especially in this market, to make money, especially as a community bank. Because I don't think that, the average merchant in Somerset, New Jersey knows who Westtown Payments is. Okay, they know who Chase is, they know B of A, and so we have to create a differentiation, and that is through the markets we serve and verticals we serve. And so, but with that, that is where the change is going to come. There are going to be banks that are going to get out. There are merchants that they can no longer support, so their value to the market goes away. And so now the bank looks at it and says, I can't make money at this, and I don't have, $1 billion division over here that can fund it till it makes money or figures it out. They just shut it down or they sell it. And so that's a player who's no longer in the market. And if enough players go out, now you have concentration risk, and so do the card brands. And so I don't think that's healthy. I will say this, though, on a positive side, innovation is just like bubbling in this industry to the point where you can't keep up. I know, Brian, you are definitely a student at the game, and I'm sure you have, you probably have a whiteboard somewhere in your office just going, okay, who they buy, where are they at, what's going on, because it's so much going on, and now, the venture world is getting back in the space, so there are more deals happening. Ironically, or interestingly enough, a lot of banks are being acquired, which the previous administration wasn't even allowing that. So it's a really interesting time. It's super exciting. With innovation comes risk. I do think that, the other thing that's changed everything is the fact that in our pockets, we have, supercomputer that is both our social connection, it's our business connection. I can transact on it. I mean, I was joking with my wife this morning, dropping her off at the airport. I'm like, here's some cash. She's like, I don't need cash. And the funny thing is, you really don't, because you have your phone and you have a wallet. And in that wallet, you have 9 of your credit cards. And you can do all these things. So it is exciting. It's moving that way. Digital assets are coming. And they're coming in what I would say is a very good way, because the government in the U.S. at least is leaned into it. There are, of course, a bunch of really great named bills being run through, like Genius, Clarity, that are helping with stable coins, but just digital asset in general. And people have digital assets and they want to spend them. And so what you're going to start seeing is more and more opportunities to, at the point of sale, use your digital assets to buy products. And frankly, a lot of people who have digital assets don't value them the same way as cash, because they didn't, and this is a bad thing to say, but they didn't like earn it. They made it. They made a good bet early on, and so they have this money, and so they use it, and they love to use it on experiences, whether it be concerts, trips, what have you. And so that market, I'm seeing it firsthand, is opening up. That's getting exciting, but there's a lot of challenges around digital assets with KYC, AML, and so as a bank, we're leaning into it, but we also know we better have our cross our T's, dot our I's, or else we'll hear from the regulators. And frankly, that's fair, and it's good, because we need to have some accountability, or banks do in general, because this is an asset that definitely can be moved, not anonymously. That's not true, but it definitely can be moved in a way that people could hide the origin of that money. And so it's compliance is not like a moment. I think it may be its moment, because it's showing up in how compliance can be valuable. And at least in my mind, I think of it as like a differentiator in a positive manner, and it may not be it also could be a revenue center if you handle it correctly. But you actually create tremendous value for the customer if they know they're compliant, right? They can run faster and harder if they know they have protection, they have armor. because they've done all the things. And so that's coming next. I definitely think the electronic payments industry is just going to keep growing and growing in places that it never was before, because they always kept saying, like, okay, we're right, we're at the plateau of where this is going to be X trillions of dollars. Now we've like quadrupled that number, which they thought was the ceiling, in 2012, because there are just so many avenues for commerce and payments to be transacted, where before, it might have been sent a check or ACH or wire. Now it's no, I'm gonna, wallet to wallet, and then there's Venmos of the world and all those things, which, have a great place in our society. So no, I think it's only going to get more interesting, but risk and compliance are going to lead the way, because, as you pointed out, a lot of this innovation comes from a non-payment, non-risk, non-compliance center. They see a problem, they want to solve the problem. That's great. That's the FinTech ethos, and we need that. And you see how it's made our so much of our society and the world economy better. But there needs to be the adult in the room, the sober mind, says, hang on a second, you're going to do what? You're going to open up bank accounts, with them just putting in a phone number? Okay. Now what? Now, how do you know? Now, how much money is being moved? Where's that money being moved? All these questions have to be asked. You just can't do it and assume, well, somebody's got it figured out, because there's a good chance that's not the case.
Yeah, absolutely. And everything you've described about the past, the present, and the future here is exactly why Qredible exists. I mean, we believe that verification, transparency, ethical leadership they're not just nice to haves, but it's the infrastructure of the next generation of commerce. Whether that's, as we move to stablecoins, it doesn't make the compliance issue go away. It makes it just as important and even more important. So what we say is that trust isn't built at scale. It's verified in every transaction with every product and every service. So that's, and I know we've aligned so well on that over the time that we've gotten to know each other and build some great mutual respect between our teams. Tell folks how they can get in touch with, how they can learn more about Westtown Payments.
Absolutely. So, certainly you can go to westtownpayments.com. It's our website. But if you want to reach myself or anyone on the team, you can just go to sales@westtownpayments.com. And then also, because our parent company is Dart Bank, you can go to dartbank.com or dart.bank if you want. That's my favorite domain. And absolutely reach out. We're happy to talk to you about not only your business, but maybe you're on the other side and you're on the agent side, or you're in the sales side and you're looking at the world and saying, God, how do I, keep my business, grow my business? We certainly can help with that too, because the market has changed. It's gotten much more competitive, but there's still tremendous opportunity out there.
Yep, absolutely. And, to our audience, so if today's conversation has sort of resonated with you, and if you believe that trust, compliance, and transparency should be the foundation of modern commerce, then you already understand why Qredible exists and what it is we continue to build. So you can visit us at Qredible.com and you can learn more, or follow us on LinkedIn and follow for future episodes. So we have a great webinar coming up, Faith. I just want to plug that because we hope to have Tom on that webinar. I think he's committing to us to be on that. It's a very important one because we have this looming date coming up. And that looming date of the CBD and hemp industry is in November. And because we have all this product information, we have the ability to talk about what's going to be good, what's going to be, bad, as far as what's not going to get accepted. So to really use some practical examples and get into the data. So this is going to be a data-driven conversation with real live product information that we've collected. Of course, we won't be talking about where they came from, but we'll be talking about the types of products, obviously, so to preserve confidentiality. But we're also going to be talking about some of these new bills that are being sponsored, and the fact that just yesterday, President Trump sort of did some things on the cannabis side, but also said on the CBD side, we need to preserve this, and Congress needs to get moving so we don't lose full spectrum hemp products. And the reason that he signed the Farm Bill to begin with, back in 18. So there's a lot happening. So we're going to have Tom and some other experts in the industry, and that date is, Faith?
May 8th.
May 8th.
So 2 weeks from now, at 3 p.m. Eastern, same as today. And the title is going to be Regulation in Motion, breaking down Section 781 and its industry impact. So I think it's going to be a really awesome conversation. I think if you want to hear from experts regarding this, tune in for sure. I'll post some LinkedIn links and everything, so it'll be easy. So if you just go to the Qredible LinkedIn, you'll be able to get right on. And I will say, Tom, it's easy to find Tom on LinkedIn if anyone wants to work with him, because I don't think anyone has your last name. So Lineen, you're easy to find on LinkedIn. So
absolutely,
he's easy to find, and you've got some great content. And make sure you look up Tom on LinkedIn and follow Westtown Payments and Dark Bank. So this is Qredible Live, and we appreciate Tom, you being with us today. Look forward to future discussions, and we will see you next time.
Thank you both.
Thank you.